Oh, I know what you may be thinking. Clickbait! Like what? So there is an indicator that can predict future price candles? Well, take a look at this. Here we had a bullish trend, and then this indicator indicated using not 1, not 2, but 7 confluences that the next candle has a 72% probability of being bullish. Now, let's see what candle came next. Well, you can see it was indeed a bullish candle, and a big one at that. In fact, if we were to go back for a moment before revealing that candle, let's say since the trend is bullish, we were to take a long position here, setting our stop loss under this trend ribbon with a take profit of 1.5 times the risk. Well, let's see how this trade would have panned out. Well, as you can see, the trade would have been profitable. And it doesn't just predict bullish candles, it does the prediction for both bullish and bearish candles. In this video, we're going to go over what this indicator is, the best settings to use, and a 15-minute scalping strategy that works pretty well on the crypto market. If you happen to find value in this video, please remember to subscribe and like the video so it can be pushed to more people. Now, let's get into it. Now, to get started, open TradingView. If you haven't signed up yet and you want to use the same setup I'm using, there is a link in the video description. Once you're on TradingView, open ETHUSD. I'm going to be using this one from Bitstamp and switch to the 15-minute time frame. Then go to Indicators and search for Predicta Futures. You want to select this one called Predicta Futures Next Candle Predictor V4 and add it to your chart. Once it loads, this is what you're gonna see. First, you have the main trend line on the chart. Now, this is actually a basic super trend with the default settings. When the trend is bullish, the super trend line is green and the background fill below it also turns green. On the other hand, when the trend is bearish, the line turns red with the background fill also being red. This basically works like a trend filter. It tells us whether the market is currently favoring long positions or short positions. And then we have the buy and sell labels. These labels are generated based on bullish and bearish crossovers between 3 EMAs. The 8-period EMA, the 21-period EMA, and the 50-period EMA. If we were to add the 3 EMAs quickly to the chart, as you can see here, I changed the first EMA length to 8, the second EMA length to 21, and the third EMA length to 50. Now, for a buy signal to be printed, the super trend needs to be bullish, the 50-period EMA needs to be angled up with a price trading above it, and then the 8-period EMA needs to cross under the 21-period EMA and then cross back above it. Once all those conditions are met, a buy signal is printed. And then for a sell signal to be printed, the super trend needs to be bearish, the 50-period EMA needs to be angled downwards with the price trading below it, and then the 8-period EMA needs to go above the 21 EMA and then cross back under it. This will lead the indicator to print a sell signal. We're going to be using these buy and sell signals as extra confluences when taking long and short positions. Now, moving on. Next, you'll see small yellow diamond markers. These are high confluence entry points that trigger only when multiple technical conditions align robustly. As of the V4 update of this indicator, these signals require specific criteria to be met simultaneously to minimize false positives and ensure that the leading indicator, the volume delta, confirms the move. Now, here are the conditions for a bullish yellow diamond marker to be printed. First, the super trend must be in an uptrend. Second, the prediction percentage must be greater than or equal to the dynamic threshold, which usually ranges between 55% to 70%, depending on market volatility. Next, the confluence score must be at least 5 out of 8, and then volume must be at least 0.8 times the average volume, and then the RSI must be above 50, and lastly, the volume delta must also be bullish. So when you see this marker, it means the indicator is not just giving you a random signal. It's basically telling you that multiple conditions are agreeing in favor of a possible long position. And then for a bearish yellow diamond marker, the opposite conditions need to happen. The SuperTrend must be in a downtrend, the prediction percentage must be greater than or equal to the dynamic threshold, the confluence score must be at least 5 out of 8, volume must be at least 0.8 times the average volume, the RSI must be below 50, and the volume delta must be bearish. So when this bearish marker appears, it means the indicator has enough confluence to suggest that the next candle may continue downward. Now, moving on. Now, these yellow diamond markers are actually called perfect time signals. Now, the perfect time signal adapts to market strength using ADX-driven adjustments, meaning in a strong trend where the ADX is above 25, the indicator may lower the required prediction percentage to allow for more aggressive entries, while at the same time requiring more conservative or higher percentages during weaker or ranging trends. This ensures the signal only fires when the trend has sufficient momentum and alignment across the SuperTrend, the MACD, the Stochastic, and volume analysis. The most important part of the indicator is the analysis table on the right side of the chart. This table is where the real decision-making happens. At the top, you'll see the current volatility reading shown with ATR. Now, inside the table, you'll have two sections, the long analysis section and the short analysis section. Each side has a prediction percentage. For example, the long side may say 69%, while the short side is saying 31%. This basically means the long side currently has the stronger next candle prediction, as you can see here. But prediction percentage alone isn't enough. We also need to check the confluence score. The confluence score is shown out of 8. The indicator uses an 8-point confluence model. Number 1, it checks the SuperTrend to determine the overall trend direction. Number 2, the EMA alignment between the 8, 21, and 50 period EMAs. Third, the MACD for momentum through crossovers and histogram analysis. Fourth, the RSI using the 50 level for bullish or bearish confirmation. Number 5, the stochastic indicator for short-term momentum and divergence detection. Number 6, the ADX to measure trend strength. Number 7, the volume ratio to compare current volume against average volume. And number 8, the volume delta to measure real-time buying versus selling pressure. For a strong signal, we want confluence to be at least 5 out of the 8 we just mentioned. The table also breaks down the individual conditions. The MACD tells us the momentum direction. RSI tells us whether price is above or below the 50 level. Stochastic helps confirm short-term market momentum. Volume checks whether volume is strong enough compared to the average. And then delta tells us whether buying or selling pressure is leading. The trend tells us whether the SuperTrend style direction is up or down. And then the ADX tells us whether the market has strong enough trend strength for us to take long or short positions. Now, let's talk about how we can trade with this indicator. Next, we're gonna go into the settings of this indicator and see how customizable it can actually be. But before we do that, let me tell you about Alfeo AI, which is an AI trading tool developed by the company called Intellectia AI. I used to spend hours watching charts daily, scrolling Twitter, also called X, checking Telegram, and still missing moves when I stepped away from my desk. With Alfeo AI, I can turn that into an autonomous workflow. I can tell it, track BTC momentum, or notify me if Nvidia drops by 5%, or monitor whale trading activity. And then the agent keeps running in the background even after I close the browser. That actually feels like having an AI analyst watching the markets 24/7 just for me. But Alfeo AI is not just for alerts. I can describe a trading plan in plain English, like if BTC breaks resistance, open a 3x long position and set a 5% stop loss. The AI builds the workflow, I confirm the logic, and when conditions are met, it can execute automatically. For me, the biggest advantage of Alpheo AI is not guaranteed profit. In fact, no tool can ever guarantee profits. For me, the biggest advantage is catching trading opportunities faster, reducing emotional trading, monitoring more markets at the same time, and spending less time staring at the charts. Alpheo AI is officially live right now. You may want to complete all beginner tasks in the Quest Center to unlock up to $50 worth of pro membership rewards. See the link in the video description as well as pinned comment. Back to the video. Now, for buy position, the first thing we need to confirm is that the market is bullish. To do that, look at the SuperTrend part of the indicator and make sure it's green with price trading above it, just like we have right here. But that alone is not enough. We also want to draw a trend line as cleanly and as simply as possible. Looking at how I drew mine, you can see that the trend line is moving upwards with price, and the price has already bounced from it twice. This confirms that the market is bullish and tells us that if price comes back to this trend line again, there is a good chance it could bounce and continue upwards. Once we have that bullish trend confirmed, we now need a clear buy signal from the indicator, like the one shown here. After that, we want a yellow perfect time long signal to appear close to that buy signal. Remember, it can appear a few candles before the buy signal is printed, or on the same candle as the buy signal, or a few candles after the buy signal. What we don't want is for it to be too far away, because then it's no longer connected to the same setup. Right here you can see that a yellow perfect time long signal appeared just 3 candles after our buy signal, which is ideal. You will also notice that the table status for the long analysis has changed to long perfect time. Once that yellow signal appears, the table adjusts to show that more than 4 conditions have been met for this setup. As you can see here, the confluence is 7 out of 8, which is very strong. On top of that, the indicator is predicting a 75% probability that the next candle is going to be bullish. Now, just like at the beginning of the video, we're going to take a long position here. The stop loss will go just under the trend line, making sure it's also below the trend cloud and the most recent swing low. The take profit is going to be set at 1.5 times the risk. Now, letting the trade run. And as you can see, ladies and gentlemen, the trade was profitable. Now, for a short position, the first condition is to use the indicator, specifically the SuperTrend section, to identify that the market is bearish, so it should be colored red with price trading below it. After checking this, we can hide the indicator because we don't want to rely on it alone. Next, you want to draw your trend line. As you can see in this example, the price bounced off the line multiple times. This is how you draw a proper trend line. The second condition is that we want to have a sell signal printed by the indicator. The third condition is to have a perfect time sell signal. This is basically the yellow diamond marker, and it should be printed either on the sell signal candle itself or up to 5 candles before or after the sell signal. In this case, we had the yellow diamond marker right on the sell signal candle itself, so the condition is met. Now, as a final double check, we can look at the prediction percentage itself. Here it shows a 72% probability that the next candle is gonna be bearish. With all conditions met, we take a short position. The stop loss is gonna go just above the trend line or above the SuperTrend cloud. The take profit is gonna be set at 1.5 times the risk. We let the trade run. And as you can see, the trade was profitable. Simple, right? Now, the main idea here is simple. This indicator gives us the prediction, but we still need structure. We use the trend line as our direction, we use the table as our confirmation, and then we use price action for actual entry. Now, a quick word on expectations. Even though this indicator is called a next candle predictor, it doesn't mean it can predict the future perfectly. In fact, no indicator can. What it does is combine multiple multiple tools into one probability-based read so you can make better trading decisions. If the long score is weak, you want to wait before taking the long position. If the short score is strong but price is sitting on a major support, you want to be careful. Always use your own analysis when using this indicator. If you found value in this video, leave a like. And if you want more clean indicator breakdowns like this, consider subscribing so you don't miss the next one. Thanks for watching. See you next time.